Hey everybody, welcome in today's video. In today's video, we're going to talk about PIPS. I remember I created a video the day before yesterday and somebody asked me on the trade that we got on GBP JPY, and somebody asked me in the comments, what is a PIP? And I was like, okay, so there are people out there that still don't know even what is a PIP. So I thought like, okay, cool. Let me create an extended video explaining what is a PIP, how you can count PIPs, and how you can actually use it in your trading. So if that sounds interesting, please do stick with us until the end. Don't forget to subscribe, turn on the bell notification so that you'll be notified whenever we release content in the future. With that being said, let's get to it. Now, what's a PIP? Right? A PIP is a short term used in the Forex market to measure the change in exchange rates, right? So the short form of it is price in points, right? So it's the difference in price from one point to another. So for instance, right now we're on USD JPY, right? So for instance, let's say prices move from, let me use this horizontal line. Where is it? Here it is. So let's say prices moved from up here to until down here, right? You see this move right here. So right here, you need to be able to count how many pips prices have moved from here until somewhere down here. The difference in price movement from here to down here can only be calculated in pips. So for instance, as traders, if you're asked maybe how many pips did you capture this week, it just means how many points did you capture, like for instance in this move or in any other move of the trade, right? Now there are different currencies have different ways in which pips are counted. So for instance, the JPY pairs and the US dollar pairs, which are the JPY and US dollar pairs are the ones that I mostly focus on, they can be counted differently. So for instance, the JPY pairs, you see on the numbers here, you have maybe like this 137.055, and then down here you have 135.894, right? So after the decimal point, you only have 3 digits. Whereas if you compare it maybe to a pair like the US dollar, Euro USD, if maybe prices, we say price movement from maybe here to down here, you can see after the decimal point, you have 1.06294. You have 5 decimal points. Same applies here, right? So the difference first you need to spot with the JPY pairs is that they have 3 decimal points after the digit, they have 3 figures after the decimal point, whereas most of the US pairs, they have 5 decimal points, right? Now, obviously, that brings a difference in counting the pips. Now, with the US dollar pairs, the first thing that you need to do while counting pips is ignore the last digit. Like for instance here, you're going to ignore it's 1.06294. That 4 at the end there, you have to ignore it. And then down here, it's 1.05785. That 5, you have to ignore it, right? So if you're told what's the pip difference from here to here, what you're going to do is you're going to take 1.0629 minus 1.0578. So you see I've completely ignored all these last digits because these are not pips, these are points, right? They're too minor to be calculated. And their change in the markets is too small, too insignificant, that's why it's ignored. So whatever answer you get there, that's the pip difference from here to here, right? That's from the US perspective. On the JPY, same thing applies. If prices have moved from up here to down here, and then you're asked what's the pip difference, you ignore the last number. So for instance, here it's 137.055. This last 5, you have to ignore it. And then here it's 135.894. This 4, you have to ignore it. So same thing applies if you ask the difference from up here, pip difference from up here to down here. You just take 137.05 minus 135.89. the difference that you get, that's your pip value. Like that's the difference in pips between here and here. Like literally, that's how easy it is to count pips. Now, there is one exception though. Obviously, you understand that we also trade. This is GBP JPY. Obviously, you can see, excuse me, this is GBP JPY. Also another JPY pair. You can see here, it has 3 decimal points after it has 3 figures after the decimal point because it's a JPY pair. So there's one pair that obviously is different, which is gold. Gold makes it different, right? So with gold, when counting pips, you actually start from the last digit after the decimal point, because you can see here it has 2 decimal points after it has 2 figures after the decimal point. So you start counting the last pip, the last number, again you ignore it, and then you start counting from the second number after the decimal point. So for instance, if you're told the difference from here to here, you're going to take 1848.2 minus 1839.0, right? The last digits, you ignore them, and that's how you can actually count pips. Now, how does pips, for instance, how do they help you in trading, or what advantages do they have and all that? Pips can actually help you understand how many dollars you're going to make or how many dollars you're going to lose. Now, after counting, for instance, here on gold, let's say 1848. So let's take an example of 1848. 1848.2 minus 1839.0, right? What's the difference here? Real quick, let me grab my calculator. I'm not going to calculate that with my head. Come on now. We're living in a civilized era. Why would we stress our minds with all that? We're trying to catch pips. We're not trying to do maths, right? 148.2 minus 1839 equals to 9.2. Right, cool. So from here to here, it's actually 9.2. But remember, I told you the difference from here to here, you start counting from the last decimal point, right? So that means it's not 92, it's 92, because you also consider this last figure or first figure after the decimal point. So it's actually 92 pips, right? Cool. So that's difference. The difference from there to there is actually 92 pips. Now, with calculating all the number of pips that are present in your, or the difference in the number of pips, how can they be of advantage to you? As I just said, they can actually help you understand how much money you gained or lost, depending on which side you took the trade in. So for instance, you are asked, okay, this is a 92 pip difference. How much money did you make? Okay, cool. What's the losses did you use? Because there's a formula to it. The formula is lot size. What's that multiplication button? Lot size multiplied times 10 times the number of pips. Equals the dollars. So this is the formula. The lot size you're using times 10 times the number of pips equals the dollars. So for instance, if you took a trade from here to here, you sold, let's say once prices reached there, you took a sell, and then your take profit was here. You use the lot size of maybe, let's say 0.01, it will be that 0.01 times 10. The 10 is constant, and then times the number of pips, which is obviously 92, will equate to how much you made. Obviously, 10 will actually cancel out 1 0 here, 92 will take over the other, so you'll have made at least $9.2. $9.2. Right. So the difference from here to here, if you took a trade here by taking 0.01 sell and then your take profit was here, it was a 92 pip move. With the minimum lot size of 0.01, you got about $9.2. That's how we can actually calculate the number of lots, how much you made or how much you lost by using the lot size. This can also be used to actually, in risk calculation. For instance, you have an account you just placed. You can put here, maybe you want to risk, let's say $5. You can just put here $5 and then 10, and then you can put here the number of lot size. It will give you how many pips you have to risk. Or if you already know, like a trade like this, maybe you already know the trade is about 20 pips stop loss. You want to know how the lot size to use. This is for those funded accounts, obviously. You want to know which lot size to use. They can just put here, maybe I want to risk maybe 1% of my account, maybe it's $1,000, right? You put here $1,000, the number of pips, you write maybe 20 times 10, it will give you the lot size to use, which will be about 2, right? I think so. So, no, 1. It will give you 1, I think. Yeah. So that actually helps you to actually calculate the risk you're going to take. Or if you miss the trade, it can actually help you calculate how much you would have made or you would have lost. So that's PIP 101, PIPS 101. If you have any questions regarding PIPS or anything that you'd like me to talk about, by the way, please do suggest in the comments below what you'd like me to talk about next, and I'll gladly do a video for it. So with that being said, guys, I appreciate you. If you've watched this video so far until the end, I appreciate you. Have a great weekend. Take it easy out there.